Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, January the 4th. The year is 2022. Let's talk trading. Trading is a skill, part 2. These videos are for educational purposes only. Your results may differ from mine. Yesterday I talked about how trading is a skill versus an art or a science. And I read something earlier today, and it made me think, because as I've mentioned before, about the three-legged stool of trading. We've got your method and your money/risk management, and then we've got your brain management. And somebody said that your money management, risk management, better be better than your trading plan. Normally we say, or I've been saying that, each leg is just as important. But I think I might amend that, because you can have a method, and if the method isn't good, it could wipe you out. But if your money management, which to me should be separate than your method, should make sure that if for some strange reason your method just quits working altogether, it goes from a profitable method to unprofitable, or you're trying a new method and this method just doesn't work at all, your money management and risk management is what's going to save your portfolio. But then again, if your brain management, if your brain isn't working the way it should be as far as trading goes, if your quote unquote, if your mind isn't right, then you're not going to follow, maybe you're not going to follow your trading plan or method. You override it. Maybe you override your money and risk management. You go into tilt, and goodbye account. So the foundation to build first is your brain management. Is you have to have control over your brain, your emotions, your actions, your feelings, etc. Because if you don't, then there's nothing else going to happen. Then you have to build a good, solid risk money management plan. Because when you really think about it, and when you're looking at the charts and you're saying, okay, when this happens, I should enter here. And then I'm thinking price should get to this point. Well, once you put that trade on, as I've mentioned before, all your pre-trade analysis goes out the window. Once you put the trade on, you're talking money and risk management. Now, you can wait for your target to get hit and or wait for your stop loss to get hit. But as I mentioned yesterday, actually, I think I didn't mention it. I answered this in on the Facebook group. Somebody said that they were doing a buy zone type of trade. I think it was a buy zone trade, and they were waiting for a 10 pip TP. I go, well, what would happen if it gets to 9? What about 1 to 9? You'll if it doesn't get you're to 10, you're willing to let it to give up 9 pips and hit TP? That doesn't sound, it just doesn't sound right to me. But I guess, that's up to the individual trader. I'm just saying that I would hate to give back 9 pips, going for that 1 extra pip and then wind up hitting a stop loss of, say, somewhere between 5 and 10. That would just eat at me. In fact, giving up 2 pips or 1 pip and getting stopped out eats at me. But, that's more emotional as opposed to anything else. So I guess that would fall under the brain management category. So that's just something that I've I guess starting the new year, I'm kind of learning something new and rethinking my perspective on the 3 legs of the stool. So risk money management has to be better than your method. And then but your brain management has to be the best, because once your brain goes off, out of the perfect operating range, you're going to be in trouble. And then, of course, the money management I was just talking about, don't let the market take it back. Just don't do that. On to the chart. So we're looking at a red month at the moment. Just barely red, 8 pips below the monthly open, 15 off the high, 88 off the low. So it's a big bounce back today. The week looks like the month because we started out the same. All the gaps filled, but you can see we took out the pivot point and the previous midpoint. Opening range, we had a nice opening range of over 100 pips yesterday. And as we're looking at the yearly levels here, once again, we're below the open. $52 pips above the daily open at the moment. Okay, we broke out of the inside bar that happened 7 weeks ago. And there's that monthly inside bar high, 38.34, 300 plus pips away from there. So 35.13, you might take a red candle on a lower time frame heading south. 61 pip range for the day. Just enough for the rat zone to be effective. Talking about the buy zone here, you can see we never got a short trigger, but we did get a couple of long triggers here. Red rats, get ready. Okay, near the R1 and pivot bias was short. It worked out. It looks like it worked out the first time, but then it didn't work out the second time. Sometimes you only go to the well once. Okay, we took out the daily pivot. We took out the weekly pivot. And we still haven't taken out the monthly pivot. We missed by 19 pips. That's still true. Mentioned that yesterday. The wick zone. We opened in the lower wick zone, previous daily lower wick zone, and we shot out, heading towards the upper wick zone, which starts at 35.26. On the higher low, lower high, let's see, how many minutes ago was that? Right near the start of the hour, there was opportunity to go short, and price poked its head back above the highest low. Another opportunity to go short. And if you're wondering, but hey, you're saying this candle was green there, that had a 3-ball, and that, to me, if I was long, I see a 3-ball, I get out because usually it reverses. But you're going to take your chances. Sometimes it'll work, sometimes it won't. So for example, right here, we got a 3-ball on the 1-minute candle. We're hitting a higher low. So that's triggering a short. Though might think twice, because one of the things I like to see 2 horizontals before I go short. So I would let that one pass most likely. Unless sometimes I do what I call the top scraper, where it hit through the high of that candle, since it was off a 3-ball right there at the open of this candle. So as this candle was going from bullish to bearish, you jump in, you ahead of that. But that's not this exact method. It's just one of the things that I've added in. But stick with the original method. It'll keep you out of trouble. Because remember, sometimes I'm just looking to make a pip or so. But you have to trade any method the way you think works for you. And then if it does work, keep doing it. Looking at the sweet spots and the wall mall lines here. When we triggered the break of the previous H1 at 15, looks like that was good for about 5 to 7 pips, depending on how quick you are. I've been noticing on my particular broker that it'll move 2 pips and then in a blink of an eye, literally the next tick, it'll take them back. So you have to be quick. Sometimes I think they're just doing it to me, but actually I know better. Let's see if you notice here, 2, 3, and 4 hours ago, under 20 pip range. So we had a nice move here at 33 pips in the last hour, previous hour. And now we're sitting at 13 pip range. Oh, let's see, what are we near? We're near the previous month's close, previous week's close. We're within 5 pips of the daily high. Looking at the different zones here. Okay, we crossed above the bottom of the wick zone, not quite to the ATR zone. We're in the upper rat zone. And let's see, we put in a new high this hour, and we're 2 pips above the highest open. So how I use this particular setup is I look to see, say for example, right here on the Aussie yen, which I think, good old Pro likes trading this, if I remember correctly. So we're in the upper ATR zone, so we're going to look for a reverse. Okay, we crossed above the actual high. We're in the upper rat zone, 7 pips above the holo. We made a new high this hour. So this setup right here, I'm going to look for a short. Maybe not this hour, but I'm going to be stalking. I would be stalking this pair, waiting for that a signal to reverse. But that's just how I would trade it. Oh, I set up this chart here, just showing you how to use the no-brainer support resistance alert. And the reason it's called this, there was a guy, the no-brainer thread or blog or something. I think he got kicked off some forums too. So I guess I have some good company, right? Anyway, but he would do his analysis and figure out and plot his lines by hand. So I wrote this indicator, so rather than plotting by hand, you could just drop it in here. Plus you get alerted. You could label it any way you want. So fellow traders, it's always good to learn something new. And in the case of what's most important, your brain, then your money and risk management, and then your method. Because if your method's no good, you need something better than your method, and that would be your risk management and your brain management. So, when you're sitting down at your trading terminal, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.